Good morning, good afternoon, good evening, traders from across the globe. Welcome to the 1478th edition of Short-Term Trading Live with Oscar. Good evening, traders. This video coming to you on a Sunday night. It's a slightly longer term view, so it's for trading from Sunday out forward. We will be putting out videos for the rest of the week that are much shorter term. This will include what we expect tomorrow, but this is a slightly longer term view, and I'd like for you to look at it. Remember that futures trading is extremely risky, causes substantial financial loss, divorces, you name it, the worst things you can imagine. It happens to futures traders if you fail to use stops, if you fail to use your risk capital properly. So watch your stops, know that this is risky, put your stops in first, and let's move forward. So what's going on down at the OMNI Trading Academy, livewithoscar.com? Let me show you. Traders E-mini September S&P weekly chart. Nothing that you haven't seen before, I assure you. Left shoulder, head, right shoulder, the head test would come. The head test did actually come. So if we want to follow along with the little bouncing ball here, we can say we had the left shoulder form, rallied up and created the head, came down and made the right shoulder, and then the Oscarism comes in. The weird Oscarism of the head test is expected. The head test is, after a head and shoulders, if it's valid, should rally up and test somewhere from the middle to the top of the head and fail and start to back off. It is exactly what we've seen here, and then we rallied back up, and the good graces put us above that high, which is nice, but it has not put us above the highs of this market at all. So this is still considered the head test. This needs to be monitored. You have seen this from me for weeks on end. I will not stop showing it to you until we get above this red line, which represents previous contract highs, and stay above the red line for a little while. Until then, this is a reality, and I will show you why on other charts. Remember, this is a slightly longer term view. I think this next one is going to put some of that time frame into perspective for us. Take a look at this next chart. Very interesting. E-mini S&P weekly chart. I used this chart months ago to show you what a flat top would look like, a 25-week-long flat top. We had one back here a few months back. I astonished everybody with this flat top call in my video. And literally at the 25th week, we tumbled. Look at the size of the drop. Now, that has nothing to do with where we are today. This is not a flat top. Don't confuse yourself. But the chart lends itself to today's market activity. Here's why. If you know the 12-letter alphabet, F, G, H, J, K, M, N, Q, U, V, X, Z, the only letters any great analyst will ever need in his life. If you know the 12-letter alphabet, then what you will find is that July represents, or N represents the month of July. So the letter N means July, and here's what's interesting. We are in June right now. 2010. The month of July started a pullback for 4 weeks, 5 weeks. 2011, the month of July, we had a major pullback. This is a weekly chart. We're talking from the 1340s down to the 1070s. In the month of July, it began in 2010, 2011. N represents July. The only alphabet anybody on this planet will ever need, my friends, the 12-letter alphabet. We come to 2012, and it's U for September it happened in. It started in September, and a mighty decline it was. It started in September. We were 1478. We ended up down at 1332. That's a mighty decline for a very quick run. This one, of course, was monstrous. Not July, but September, so we will discount this one, right? It did not happen. It happened in September. We're short-term traders. September's a long way out. July in 2010, July in 2011, July 2013. We only skipped 1 year where it did happen, but not until September. July 2013, crack. July 2014, we get a crack. July 2015 starts a hurricane. This is July coming right here on this calendar date for 2016. What will happen? Well, hopefully we'll just go gangbusters through and continue on. But that's not what generally happens in July. Now, If we add that to what I was just showing you, this head and shoulders test in the S&P, let me show you the head and shoulders test in another market that you might find interesting. Let's see, I saved that first here. Here's your NASDAQ September weekly chart. Here's your left shoulder, head, right shoulder. Here's the size of your head test. All the NASDAQ did since it made the right shoulder was come up and tap the bottom area of what would be considered a head test area and dump. Rallied to here. On Thursday and Friday had a decent dump. Does that mean it can't go up past here? No, it does not. Giving you signs for caution. This is a slightly longer term view. Just keep this in mind. This is working with the head and shoulders I showed you already in the S&P. There's a very defined head and shoulders in the Russell. I won't even go into it. But the head test here has done exactly what it was supposed to do in your NASDAQ. So you need to just keep this in the back of your mind. It doesn't mean that we can't go higher. In fact, my economic outlook tells me that this formation right here couldn't possibly end up working. But who cares what I think? I'm a numbnut human. The chart is accurate. The market is always right. The chart says this is what's going on right now. Let's go look at something else that's finding benefits out of all of this. Look at the gold market. If you recall that astonishing low call I gave out with the cup and handle, I know it gets called quite often in other arenas, but the OMNI Trading Academy or Oscar does not make these calls unless they're actually real. So when I made this call, it was a real call. It became a cup and handle. It worked well. And the bottom in gold was in. We were blessed with OMNI pointing out the bottom before the cup and handle started. Cup and handle was my catalyst to believe that the OMNI had this nailed. And then I started to show you the handle grew after the cup. And voila, we had our rally. Okay, so that's wonderful. Here we are on a daily. Now, this is for what's happening right now, up front, Sunday night, Monday, Tuesday. The gold has really benefited well and should continue to benefit well. And remember that what was resistance, let's call this red for a little while, what was resistance, if you're an analyst, and it gets broken through and held above, becomes support, the green. What was resistance? Stopped the market cold here and here and here and almost here, and stopped it for one day here. Next day you got above it, climbed above, was resistance, becomes support. Interesting, right? So now you've got support below the market in gold. You've got good reason in the charts to think gold should go higher. The gold has been going higher since the bottom's been called. It had this plateau, if you will, right here. But now it's starting to want to best above the plateau, which let's see what it's going to do. Right about here, I guess you consider it the plateau. And now it's testing that plateau. You get above it, and you should get a higher high than this one. So gold is feeling the benefits, and you'd expect that to be absolute. One of the major reasons is that we're not raising rates or not raising rates. We're not figuring out what's coming next, and the world's getting nervous. Plus, you've got Brexit, the British exit of the EU. You've got, the Fed meeting Tuesday, Wednesday this week. You've got reason for gold to want to pop a little, and the indices like this one to possibly come off a little. No, let's go to this one. I don't think you want to see any of that. You want to see this. So there is a possibility that this is what it's supposed to be. Gold does not rally for no reason. Maybe gold rallied because Brexit is going to start a crumbling of the EU, and once, if, God forbid, Britain leaves, the UK leaves, maybe the other countries might follow. I don't know. I have no absolute reason why that this chart has done what it has done, but I will tell you this right now. Gold does not bottom out and rally like this for no reason. There is a reason. There's a fundamental reason. Could it be Brexit? I don't know. Maybe something wider spread. But gold usually won't do this for no reason. And generally, you're not going to get this for no reason. So please be aware that these things exist. Come on down to livewithoscar.com. Hang out with me in my free trading room where I'll teach you how to be a much better analyst. And I hope that in turn makes you become a much better trader. Remember, always keep your emotions at bay in this game. Remember to say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stop are in. Emotions are out. Rock and roll traders. I'll see you all at livewithoscar.com.